The goal with charting is to separate the signals from the noise. Hello, everyone, and welcome to the Money Flow Stock Market Review and Executive Forecast. I'm your host, Dr. BJ Love, and I'll be bringing you this week's update. Here at Money Flow, we use time-tested methods and indicators that helps us to navigate these markets with confidence and calmness. Now, for the period ending July 24th, 2026, the major averages faced broad-based downward pressure as the escalation in the Middle East conflict drove oil prices above $91 a barrel. Now, Treasury yields went to 4.685. Usually, with rising yields and rising oil prices, is not a good sign for for indices in the stock market. Now, with growth valuations pinched and tech under pressure, institutional capital continues to rotate into high-yield energy infrastructures and precious metals. Despite the index deterioration, the VIX is holding in between 15 and 19 zone points to structured portfolio rebalancing rather than liquidity distress, as we reiterate each time we broadcast that as long as the VIX stays below 20, we tend to grind higher or stay stable. There is not a panic mode until we get around the 20, 25 point area in the VIX. Now, if you look at the index performance for the week, the Dow Jones Industrial closed down 199 points for the third down week, and it is still above its 50-day moving average. The S&P for the week closed down 46 points, and it is its second down week and broke below the 50-day moving average. Now, the NASDAQ Composite, which moved the most, 2.1% down for a second week, and it is below the 50-day moving average, and the Russell 2000 small caps changed negatively around 1.1%, and it's down for the third week, and it bounced off of its 50-day moving average. Now, the macro and geopolitical drivers are, the tensions and the energy shock. The sharp late week sell-off was triggered by Thursday as the Iran-backed Houthi threatens to expand into the Red Sea shipping lanes. And that is why we had our oil surge at 91, almost $92 a barrel. Now, the Treasury yield pressure, bond markets, reprice geopolitical and supply risk, pushing the 10-year yield up to 4.665% before closing at 4.85%. I'm sorry, 4.65% and 4.85%. It is the highest level since January 2025. Yields are testing that threshold of 4.75%, where it could really negatively affect markets. That is something that we will be watching closely. Now, institutional sector rotation. Now, capital actively exited the technology sector, driving the NASDAQ down 2.1%. However, aggressive allocation into the cyclicals and the defensive value sectors prevented systemic downside, locking main benchmarks within their post-June consolidation range. Now, as we go on, technical and volatility gauge, the SOX or the ETF for semiconductors is trading below its 50-day moving average. The Dow Jones Industrial Average equal weight and S&P weight, they're holding above the 50-day moving average, and the momentum indicator, the MACD, has had a bearish crossover. So we're right there in that neutral zone. And of course, we already mentioned that the CBX or the VIX, aka the fear gauge is holding between that range of 15 and 19, and we refer to that as a controlled order. Now, and just reminder, the VIX persistent position in that 15 to 19 range confirmed that institutional investors are managing risk via targeted downside hedging and sector rotation rather than outright portfolio liquidation. So we look at our alternative assets. We see that gold closed at $4,060 and silver closed at $58.65 per ounce. Bitcoin is in a high beta regime test, consolidating around that key support level, behaving as a hybrid between digital gold and risk on asset. Now, our outlook for the near term, we have a headwind from risking free yields at 4.685%, but structural adoption and post-halving supply dynamics remain strong as a secular catalyst. Now, we have some stocks on our watch list here that have really been behaving strongly during all of this volatility. Now, amid the macro instability and market shocks, energy infrastructure, maritime shipping, and mineral royalties have shown resilience. And these vehicles offer defensive cash flow in the energy exposure and high yield. So we have on our watch list, we'll be watching very closely Kinder Morgan and its performance. It has exceptional cash flow stability driven by free-base natural gas and energy logistics assets. It insulates from direct spot price swings. Now, Nordic American Tankers offers a 10.5% yield. Now, its performance is thriving in an environment of disrupted Red Sea shipping routes, now driving charter prices up and expanding cash distributions. That is, even though in chaos, we do see a silver lining, and this is one of the stocks that we're watching that really pays a very good dividend, and it's high. It's at 10.5% yield. So if the stock price goes nowhere, you still gain 10% for the year on this particular company. Now we have Vermilion Energy, ticker symbol VET. It's leveraged directly to the global energy price spikes with strong international European gas prices, realizations, and disciplined debt reduction. Also moving down to Blackstone Minerals, ticker symbol BSM. It has an 8% yield, and it performs very well during if oil prices stay above $90 a barrel. We have our penny stock here that we're featuring, BCDS, Black Clouds. It develops decentralized payment and commerce infrastructure, and it's building a long-term ecosystem value amid structural shift to digital settlement solutions. And then last but not least, we have on our watch list before we go to the charts is VOC Energy Trust. It has a 11% yield, believe it or not, 11.7% yield. So if the stock price goes nowhere for the next year, you still will gain 11.7% on your money if you invested in this stock. Now, and this is a beneficiary of oil staying above $90 a barrel. Now, what is our strategic portfolio position and outlook? We have a mega cap earnings catalyst, as the focus is going to be on the Magnificent Seven this week, Monday through Friday. We're going to have earnings releases from those other Magnificent Seven stocks. Geopolitical sensitivity, direct military escalation between the U.S. and Iran represent the primary tail risk capable of pushing oil past $100 a barrel and breaking the VIX out of its range from 15 to 19 into panic territory, which will be about above the 25 point range for the VIX. Now, our tactical allocation: maintain elevated allocation to cash aggressive generative energy infrastructure like KMI, BSM, and VOC. And then for the maritime, NAT, and we're still gonna work our way through the precious metals right now as a hedge for inflation. Now, what we're gonna do is flip over to the charts. And we can see right here at our 4 grid, if you've been familiar, been with us a while, you know we use this 4 grid as a line in the sand to determine long-term bullishness or bearishness. And as you can see, we have this green background that we have had since, oh my God, May of 2025. We have been in a bull market, up, 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 up. We came down for a little while, but the background has never changed its color. Now, we do see an early warning in our MACD as it has crossed over into the negative, showing that we have really reached the top, because for the last 6 or 7 weeks, the S&P 500 has really gone nowhere. You hit a high of 76.20 at on June 1st, the week of June 1st, and had just kind of slid sideways most after that. Now we move on to the Dow Jones Industrial Average. You can see a similar pattern. We have a green background showing that we are still in a long-term bullish posture. However, for the past 4 weeks, the price have done nothing but going sideways. We do still have a positive signal on our confirming indicator, the MACD, and showing that this particular pattern on the Dow Jones Industrial could continue and go higher. Moving on now to the NASDAQ, we have a different story. It has breached our 10-week moving average and heading toward a rising 40-week moving average. We can see that our confirming indicator, which has been somewhat reliable, very reliable for us, has crossed over into the negative, giving an indication that the NASDAQ could go lower, has a very high probability of it going lower, and the upside potential is cut off at this particular time. Now, moving on to the small cap, Russell, green background. What do we have? Bullish posture. We're on the verge of a MACD crossover. However, again, our simple philosophy is, as long as we have a green background and the prices are above the rising moving averages, we are in a bullish posture. All 4 indices, and it is, and that confirms that we're still in a bullish posture, even though we're seeing some turbulence and some pullbacks. They're very shallow and not anything to be concerned about at this particular time. So what we're going to do now is shift into our triple screen mode. Oh, one thing I want to talk about was the inverse funds for SpaceX. SpaceX has been in a downturn, right? And it's been losing money every day. So what we have done, and I advise my followers to do, is we invest in the inverse fund. When SpaceX goes down, this particular ETF goes up, and the ticker symbol is SSPC. And as you can see, over the last half a month, last 2 weeks, it gave us a signal to get in at around $12. It has now climbed all the way up to $23, doubling since July the 8th. All right. So with that, we're going to end and just say that every day and every way we get better and better. Every day and every way we grow more prosperous, successful, and victorious. And God bless all the